Ladies and gentlemen, welcome back to the channel. Here in this video, I will share with you all of the news today, good and bad, that is affecting markets, and PCE is definitely a huge catalyst. We will start with that, but I'm sure you guys have noticed this. If you haven't, this is going to be crazy news to you. But AI software stocks are absolutely killing it right now in our markets. This has been happening for the last couple of days or so. The recovery from the whole DeepSeek news kind of led into this big software rally. Now, in a video coming out later tonight at about 8 p.m. Eastern Standard Time, I'm going to share with you a hidden gem in the AI race. This is a stock that only has one analyst covering it. It is a $7.5 billion market cap company with zero debt on their balance sheet and cash per share over $9.40. So over $2.2 billion of cash on their books. I think this is a huge opportunity. I will share that with you in the video at 8 p.m. today. And let me know down below in the comment section what your guess is for this stock. Oh, and I should mention, it just got relisted on markets in the past 2 months or so. And that's the reason why it doesn't have many analysts covering it. And I literally think it is a hidden gem within AI. And I think the stock's going much higher. But that's a topic for a later video. Let's get into, first and foremost, the biggest catalyst of the day today. PCE is a big driving catalyst today for our markets, and I do believe it's going to continue to be a positive force in markets as CPI continues to come down. Now, especially when we get into what Fed Goolsbee just said, he really highlighted something that I think is very important that we all pay attention to. But nonetheless, Nick Timmerhouse writes on X, the core PCE index rose 0.16% in December, a touch softer than expected. Major banks, as a consensus, were expecting 0.18%. So it was a little bit lower than expected. And if we annualize 0.16% times 12, you're looking at a run rate on core PCE of about 1.92%, actually below the Fed's 2% target. Now, this post goes on to say that core prices are up 2.8% over the preceding 12 months. The 6-month annualized rate ticked down to 2.3%. So if you're looking at 6 months as a running rate, you're almost to the Fed's 2% target, the lowest in all of 2024. So we are making considerable progress on inflation, despite the headlines, despite the fear and what some people may be saying. The 3-month annualized rate dropped to 2.2% from 2.6% in November. So just really in the last couple of months, you have seen some massive progress on inflation. Now, if you look at super core prices, that actually came in at 0.1%. So super core is well lower, than the Fed's 2% inflation target. So, I mean, the question will soon be, why is the Fed not cutting rates when inflation is making this kind of progress? Now, Fed Goolsbee said, quote, I have no problem slowing the pace of cutting, feeling our way towards the neutral rate. But this is really the bombshell comment from Fed Goolsbee. He says that if you look at the 12-month inflation rate, quote, if inflation continues on this path, the 12-month number is going to start plummeting in Q1. Really, he meant after Q1, because if you remember in early 2024, you had the inflation spike. So you're really going to see those numbers start to plummet here over the next couple of months. And that's going to be, really positive for that 12-month headline inflation number. What Austin Goolsbee was really saying is he doesn't like to look at that 12-month number as much. That has been stickier. But if you really look at the recent reports over the past couple of months, Austin Goolsbee was saying that has actually been very positive. Fed Goolsbee says, I have comfort that we are on the path to 2% inflation. Fed Goolsbee says, I'm liking today's inflation data, which was a little bit better than expected. Also in big news today, Nvidia's boss Jensen Huang set to meet Trump at the White House, per the Financial Times. It says the person familiar with the information said the meeting had been planned before Chinese artificial intelligence startup DeepSeek stunned Silicon Valley this week, with advances apparently achieved using less computing power than US tech groups. The news wiped almost $600 billion from the value of Nvidia, one of the biggest winners from spending on AI chips. We did also have Chicago PMIs that came in at 39.5, and the forecast was 40, so a little bit weaker economic data this morning. Canada's outgoing Prime Minister Trudeau says any Canadian response to tariffs would be purposeful, forceful, and immediate. He also says that if we have to act, we wouldn't relent until tariffs are removed. Adds everything is on the table. And he says that if Trump does choose to implement any tariffs against Canada, we're ready with a response. And then he goes on to warn his citizens, Canadian people, that Canada could be facing difficult times in the coming days and weeks. Now, here on the day today, the Dow is marginally in the green today, 0.03%. S&P 500 is up 0.77%. The Nasdaq is up 1.4%. The Russell 2000 is up 1/3%, and the VIX is declining about 3.6%. If we take a look at bond yields today, moving lower a little bit, we are sitting at that critical level of about 4.5%, 4.50%. In fact, right on that 4.5 level. If you get a break below that, then yields could start to break down, and that would be very positive for equities. Oil is down 1/3%, and gold is up 1/3% today. Now, there's one more headline from Austin Goolsbee that I almost missed, but I do want to share with you in this video. He says, quote, "We have made a lot of progress," referring to inflation. "Our signal is getting muddy from Washington. A one-time increase in cost without reaction, like retaliation from Canada, for an example, should be a transitory boost in inflation, or really in just prices, and there shouldn't be a reaction from the Fed." But the Fed goes on to say, basically, if there's a trade war that starts going on, that could lead to a more persistent rise in inflation that would need to be reacted to by the Fed. So Goolsbee sounding optimistic that that's not going to happen, but he's also saying that the Fed cannot sit by and you know, put their arms over their chest and say, well, whatever happens with tariffs, because we're not going to respond. The Fed's not going to do that. Assuming we don't enter a massive trade war with many different countries, I don't think this is an issue that we really need to worry about. And in a positive start to things, Venezuela's President Maduro seeks to restart talks from zero with the United States government. And this headline here says the Panama Canal is a strategic asset and cannot be under de facto control of China. This was said by Mauricio Claver Carone. He is the U.S. Special Envoy for Latin America. The CNN Fear and Greed Index today is coming in neutral at 52. Yesterday, it was neutral at 48. Market momentum is now neutral. Stock price strength, extreme fear. Stock price breadth is neutral. Put and call options, greed. Market volatility is neutral. Safe haven demand is greed. And junk bond demand is currently in greed. Now, the percent of stocks trading above their 50-day moving average, moving up a little bit today to 52%. But still, almost 50% of stocks are below their 50-day moving average. This is not like a super strong, super frothy market. Okay, sure, there's areas that have been doing very well, but it's a far cry to say these markets are frothy or overextended or need to go through a correction by any means necessary. Again, that can start to be a topic of conversation again. When you get to like 80% of stocks trading above their 50-day moving average, that's when you tend to really be prone for a correction. So we are not there yet, and it could take some time to get there. Now, if we take a look at the most recent AI investor sentiment survey, you're coming in today at 41% of investors that are bullish, 25.0% of investors that are neutral, and 34% of investors that are bearish. This survey asked investors a simple question: What direction do AAII members feel the stock market will be in the next 6 months? So 34% expect markets to be lower, 25% really don't know, sideways to undecided, and 41% of investors think stocks will be higher. Again, I will point out this is not a super optimistic number as well. The 1-year bullish high is 52.7%, and this was recorded on July 17th, 2024. So you're kind of right on historical averages for the amount of investors that are bullish. So ladies and gentlemen, let me know what you think about this information down below in the comment section. It does look like the headline S&P wants to break out from here to a new all-time high. We have gotten, some consolidation ever since December. We recently hit a new all-time high barely at about 610.78. You fell a bit. You fell about 1.5% on January 27th. You've recovered now. You're almost retaking that prior all-time high. And once you do, I do think that sparks a larger rally. But I do think this is going to be a broader-based rally. I do think the software AI names will probably continue to work, but I do think other areas will start to participate as well. And it's not just going to be a big tech-driven market this year. And I think, you need to be prepared for a little bit of, broader rally. So if you're all in S&P, ETFs, you may miss out at least a little bit on the rally here in 2025. Just my opinion. Obviously not financial advice, not a recommendation. Come to your own conclusions. You already know the disclaimers. With that said, let me know what you think about this information down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.